The Dow Jones closed at a record-breaking high. Yes, for the first time in history, the Dow Jones Industrial Average closed above 16,000 yesterday, and that is up 109.17%. So, Zach, what does this mean? The recession's over, the economy's back in tip-top shape, the government has a new problem to solve?
Totally, everything's fine. Stop crying. No, I actually think this is really bad news. If you look at the inflation-adjusted record, the Washington Post did a great little dork post for Wonk Blog a couple of days ago. This over here is where Wonk Blog and the Washington Post are, and it pointed out that if you look at the inflation-adjusted record, which would be sort of the real record, we're actually still only about 200 points away from that. And the all-time record for the stock market was set in the 1990s at the height of the tech bubble, and you don't really want to be there unless the economy is really, really kicking ass. And the economy was doing pretty well in the late 90s because of the tech bubble, but right now the economy is still very weak. This has been a pretty lousy recovery for the most part. So to see financial assets doing that well, to see the stock market that high at a time when things aren't really that great, I think is indicative of things being way out of whack. And if this is not some sort of bubble in the stock market, then we're looking at sort of a permanent disconnect between the corporate class and people who actually own stock and everybody else. The number of people who actually own stock has declined by about 10% since the 90s, down from 60% to about 52%, and that's not good.